In this video, I'm going to show you how you can find high probability trades using the data from this chart that tells you the percentage of times the S&P 500 has closed higher the following day. I like to call this tomorrow's triumph rate, or TTR for short, and it's available at alphacrunching.com. Now let me quickly explain how it works and how you can use it to find high probability trades. So again, the TTR stands for tomorrow's triumph rate, which shows the historical percentage of times SPX has closed higher the next day over the past 2 months. So we're looking at the current week of April 4th, 2024, and we can see that Monday this week had a TTR reading of 50%. Now mind you, this data comes out before the trading week begins, so we know what the TTR values are before Monday morning. So we can look at this Sunday night, and we know that Monday has a value of 50%. And what this means is that 50% of the time over the past couple months, Tuesday has closed higher than Monday. Because remember, this is tomorrow's triumph rate. So 50% here means that Tuesday has closed higher 50% of the time, kind of a coin flip as whether or not Tuesday will close higher this week. But now we see that Tuesday has a TTR value of 67%, which means 67% of the time over the past 2 months, Wednesday has closed higher than Tuesday. Next, we see Wednesday, 89%. This is a very strong reading. That means that Thursday has closed higher than Wednesday 89% of the time over the last couple months. And then Thursday drops back down to 50%, meaning that Friday has closed higher 50% of the time. And then Friday has a very meager 14%, which is saying that over the past 2 months, Monday of the following week has closed higher only 14% of the time. So in and of itself, these values are somewhat valuable. You could base some trades off of it, and we've done that. But I think the real value in finding patterns over the course of the recent weeks can be found in the historical table, which is going to show the most recent 8 weeks of data. So we have the week of April 1st here. We can also go back in time if you want to look at previous weeks, but the historical table below is going to show us the most recent 8 weeks. So what we're going to be looking for are multiple days that we can maybe trade off of. And what we're noticing here is that week over week, Monday values are anywhere from 40% to, we have a high of 63%. So Monday to Tuesday is a little bit of a crapshoot. It's not real consistent. But once we look at Tuesday's historical TTR values, we can see that they're all basically above 50%. We have 56%, 67%. So in general, there's a slight probability that Wednesday has closed higher because that's the pattern it's been over the last 8 weeks. Wednesday's had an even stronger reading over the past 8 weeks, meaning that from Wednesday to Thursday, Wednesday's close to Thursday's close has been higher 78% of the time here, and then actually got stronger. And then we start to see Thursday changing a little bit. Thursday backs down, so 67% for the first 4 weeks here, 78%. So pretty strong chance that Friday has closed higher than Thursday. So we can see that start to dwindle here, as now Friday closing higher than Thursday is now down to 56%. It's back in the sort of 50% range. Friday is interesting because Friday to Monday started out at 60%, which is relatively bullish, but it's been getting increasingly worse over the course of the 8 weeks. And I'm going to do another video on that, about how you can use this pattern. Selling call spreads on Friday that expire the following week has been a very winning strategy, as we've been talking about in the trading group. But let's talk about finding high probability trades using the bullish numbers. So since from Monday to Tuesday is a little bit of crapshoot. I don't want to use that word, but it's just kind of inconsistent. We really get some more consistency in the Tuesday to Wednesday, Wednesday to Thursday, Thursday to Friday zone. So what we're going to do is we're going to hop into a backtest program called Option Omega. And what we're going to do is we're going to sell put credit spreads just out of the money with 3 days to expiration. And we're only going to sell them on Tuesday mornings, 9:45 a.m. And over the past several weeks, maybe a couple months here, this has been a 100% win rate, selling a 3-day to expiration put credit spread on Tuesdays, taking profits at 50%. It's a sort of standard profit-taking mechanism. And we can see that we've had a 100% win rate over the past I think this is from January 29th. That's approximately 2 months or so. That goes farther back, a little bit farther back. But this is how you can find high probability trades, is define multi-day patterns that you can trade options against. I like to do put credit spreads and call credit spreads. Selling call spreads on Friday has been a good strategy as well. I like to go out about 5 days expiration, so that's been working too. So you can see these ebbs and flows of the market, and you can see how they actually start to change. And this is also a sign of the overall market in general. Typically, in a bull market, you're going to see strength through the end of the week, and then maybe some weakness earlier in the week. So this tends to be more of a bull market. However, what we've seen is this is starting to fade a little bit, and now the early week weakness is actually getting stronger. So what we're looking at now is strength earlier in the week and then starting to fade off at the end of the week. So I don't know if that pattern is going to continue. That's why the data is updated every week, so we can see it week over week, and we decide where we can find high probability trades that are typically 2, 3, 4, 5 days to expiration, especially if you trade SPX options. So let me know what you think in the comments, and we'll see you in the next video.